Have you ever wondered how cryptocurrency traders make consistent profits in such a volatile market? Welcome to the fascinating world of cryptocurrency trading strategies. These strategies are not just a game of luck, but a sophisticated blend of understanding the market sentiment, keeping an eye on news events, and mastering technical analysis. The crypto market, much like any other financial market, doesn't move at random. There are patterns and trends influenced by a myriad of factors, and the successful trader is the one who can decipher these patterns. The importance of having a solid strategy cannot be overstated. It's the compass that guides you through the wild waves of the crypto sea, helping you make informed decisions rather than relying on gut feelings. Whether you're a seasoned trader or just dipping your toes into the crypto waters, understanding these strategies can be the key to your trading success. So let's dive into these strategies and see which one might be the best fit for your trading style. Among the most popular strategies is day trading, which is all about making many trades within a single day. Imagine a bustling marketplace where you're buying and selling goods based on the fluctuating prices. That's day trading in the world of cryptocurrency. As the name suggests, it involves making multiple trades based on short-term price movements, all within the confines of a single day. Now, what makes day trading attractive? It's the potential for quick returns. However, it's not all sunshine and rainbows. This strategy requires a lot of time and attention. You need to constantly monitor the market, ready to make snap decisions based on price fluctuations. It also demands a good understanding of technical analysis to predict these price movements accurately. But let's not sugarcoat it. Day trading is high risk. The cryptocurrency market is notoriously volatile, and prices can swing wildly in a matter of minutes. So, while it can be profitable, it requires a lot of dedication. Remember, while day trading can be profitable, it's also high risk and requires a lot of dedication. Next up, we have swing trading, a strategy that aims to catch the swing within a market trend. Swing trading is a unique approach, differing substantially from day trading. Where day traders buy and sell within a single day, swing traders play a longer game. They aim to capture price changes that occur over a period of a few days to several weeks. The key to successful swing trading lies in technical analysis and trend identification. By studying market patterns and price movements, swing traders can predict potential price swings and position their trades accordingly. But remember, this strategy is not for the faint-hearted. It requires patience, as profits are not instant and can take some time to materialize. Swing trading also demands a thorough understanding of market trends. You'll need to keep a keen eye on the market, identifying when a trend is about to swing in your favor. Swing trading can be less time-intensive than day trading, but it still requires a sharp eye for market trends. So, we've explored two common cryptocurrency trading strategies today: day trading and swing trading. Let's quickly recap what we've learned. Day trading involves making many trades within a single day. It's fast-paced and requires a significant time commitment. On the flip side, swing trading allows you to take advantage of market trends over a few days or weeks. It requires less time commitment, but a keen understanding of market trends is crucial. Choosing between these strategies isn't a one-size-fits-all decision. It depends on your own time availability, risk tolerance, and understanding of the crypto market. Some may thrive on the adrenaline rush of day trading, while others may prefer the analytical approach of swing trading. Remember, no strategy guarantees success. It's about finding a strategy that aligns with your goals, skills, and risk tolerance. Happy trading!